Following Tesla's recent 3-for-1 stock split, there is a mix of expectations among stock analysts and investors. While some believe that the EV company's stock may be overvalued, others are pretty optimistic about Tesla's future stock performance. Hey everyone, and welcome back to Everything Tesla Stock. In the past few months, Tesla has recorded both significant wins and losses in the course of producing and delivering EVs across its markets. However, for a company to thrive, there should be an efficient system in place for increasing revenue and lowering costs and debts in the best way possible. Considering Tesla's past records, there are reasons to assume that the stock price may recline into the negatives, like the rising inflation and the inability for the car company to meet its project deadlines. But as well, there is a high chance of the company's stock doing well in the coming months. But can we really expect the stock to rise despite the difficult market challenges? You're about to find out. Before we get into it though, if you like this type of video, don't forget to hit the like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. Being a major driver in the EV market, Tesla has constantly been in the news these past few months. The EV sales are estimated to have grown about 105% year over year in the United States and many markets globally. Also, several stock analysts have raised the price of their targets on the stock following the 3-for-1 stock split. Wedbush analyst Dan Ives changed his price targets for Tesla stock from $1,000 to $360 post-stock split value, adding that this was due to the expected production ramp-up in Tesla's Shanghai factory. Likewise, founder of Future Fund, Gary Black, also had a $500 price target on the stock. But are these price targets feasible for Tesla? Keep watching to find out. The stock had dropped significantly in previous months following the halt in major production at its Shanghai plant in May. This was due to problems securing parts for its electric vehicles, leading to a series of difficulties at the factory. Although Tesla has planned to increase output to pre-lockdown levels by mid-May, the factories barely produced 200 vehicles at the time. While addressing the issue, Musk revealed that although he is confident that Tesla can produce a record number of electric vehicles in the rest of the year, the key to that may lie beyond his control, and there is no guarantee that authorities won't impose more restrictions. Likewise, the news of Musk selling Tesla stock in August this year further plunged the stock price. The Tesla CEO sold 7.92 million shares of the company, worth around $6.88 billion, amidst his recent Twitter trial. Although Musk later disclosed that he is done selling Tesla stock, one cannot be too sure what the future holds. In the midst of the stock price plummeting, investors expected the stock to rise following events like Tesla's Battery Day. The automaker held the event in 2020 to show off its latest battery improvements. Tesla unveiled plans to develop a million-mile battery that could last an electric car's entire lifetime on the road. The 4680 cells are expected to reduce Tesla's manufacturing costs and improve efficiencies. Experts also revealed that the use of larger cells and a dry coat electrode process could enable Tesla to have half of the cost of its current Model Y battery. The car maker is already leading the industry in terms of using lithium-ion batteries in electric cars, and with this new range of batteries, Tesla could have the resource to manufacture high-rated EV cars far better than anyone else on the market. The automaker intends to reduce the cost of its cells to $100 per kilowatt hour, which could eventually make electric cars comparable to that of combustion engine vehicles. However, the price of the stock didn't make any significant increases after this event. Likewise, when American car rental company Hertz announced its massive purchase of 100,000 Tesla Model 3 vehicles, Tesla bulls also expected to see a surge in the company's stock price. And it did happen, but not for long. The rental company announced that it was planning to take deliveries of the 100,000 Model 3s by the end of 2022, and also added Tesla Model Ys to its growing electric vehicle fleet earlier this year. Hertz also made a deal to offer 50,000 Tesla electric vehicles to Uber drivers. The company's been increasing its Tesla vehicle fleet, and this can further boost Tesla's popularity and open it up to more users. However, although Tesla recorded a minimal rise in its stock price after this purchase, there are several other factors and projects that could see the stock price rising in the coming months. Musk revealed that one of Tesla's main plans for the rest of the year is to release new updates on its FSD feature, and this is likely to happen. Earlier this year, Tesla released FSD Beta 10.69, which features several significant improvements from the previous one. The car maker soon after released a new version, 10.69.1, which also came with more features. But that's not all. Musk revealed on Twitter that Tesla plans to release FSD Beta 10.69.2 in September. He explained that this next and potentially final version still needs to be polished, and although it will feature a significantly smaller amount of code changes, their effects on the driving experience are going to be significant, adding that there will be improvements to the advanced driver assist software. Also, Tesla plans to roll out the new FSD beta version to all of its 100,000 testers. Musk said that Tesla's FSD beta software is priced at $15,000 in North America, $3,000 higher than the previous price. What's your take on this? Let us know down below. Since Battery Day in 2020, Tesla's been making efforts to scale its 4680 battery production. This is in a bid to improve its next generation of vehicles and a 20 million EV target by 2030. No doubt Tesla's been finding this somewhat challenging. Experts have revealed that Tesla is only halfway towards achieving this goal of successfully rolling out its 4680 cells, and is facing challenges with scaling its dry coat electrode process. However, the EV maker does continue in the process of achieving its goal of using larger cells for its cars, and experts have reportedly stated that Tesla will probably still be able to implement 4680 cells dry coat electrode process next year. In similar news, the car company seems to finally be on its way to getting rid of the junk bond rating and becoming a blue chip. Despite recording high delivery profits for more than 2 years straight and building a cash position of over $18 billion, Tesla is still rated as a junk bond by rating companies like the S&P Global Ratings and Moody's Investors Service. However, that seems to be becoming something of the past. Bloomberg Intelligence credit analyst Joel Levington recently stated that Tesla is still generating a huge amount of cash, which will eventually cause these point rating companies to act. He added that he wouldn't be surprised to see an upgrade to Tesla's investment grade happen before the end of this year. Needless to say, this is somewhat overdue for the 6th most valuable company in the world, and although it may not look like much as far as a difference to an average Tesla investor, it may mean a lot of large funds that often have a policy not to invest in companies that have anything less than an investment grade rating. With a higher rating, Tesla will be able to attract these larger funds, and that could mean a lot for the automaker. Also, Tesla is soon to have its second AI Day later this year, and the car company is expected to release several interesting improvements and updates. Tesla's AI Day last year showed us that the company unveiled its Dojo supercomputer, which it claimed to be the fastest AI training machine in the world. And not just that, the company's fully bipedal human robot, Optimus, was also unveiled, and that had gotten several Tesla investors super excited about what to expect from this new technology. Although the Optimus project was unveiled last year, Tesla is looking to finally give an update on the project at its second AI Day later in September. This event was initially scheduled to be held on August 19th this year, which was exactly 1 year after the first AI Day last year. However, Musk later announced that the date's been pushed back to September 30th, stating that the reason behind this delay was because Tesla was planning to have a working prototype of the Optimus robot by late September. With Tesla's humanoid robot up for release, the company can massively increase its revenue. Also, the expected report on Tesla's Q3 deliveries and sales is likely going to be another booster for its stock price. Before the company's Q2 earnings were released, Wall Street predicted $16.521 billion in revenue and earnings of $1.81 per share in the quarter. This was due to the forced shutdown of the Shanghai Gigafactory, resulting in about 250,000 deliveries instead of well over 300,000 that were expected. Luckily, Tesla's financial report for the quarter surpassed expectations on both earnings and revenue despite the difficult quarter. The company reported revenues of $16,934 billion, which was about $400 million higher than Wall Street expected when it came to revenue, and earnings per share of $2.27. Since Tesla was able to pull through the toughest quarter, most Tesla bulls are pretty optimistic about what's going to happen in the third quarter of this year. But what do you think? Let us know down below, and while you're still here, go ahead and click on one of these two videos on your screen. See you there!